Hello, my name is Suzanne, and I will be your conference operator today. At this time, I would like to welcome everyone to the Federal CARES Act conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, please press the pound key. Thank you. Mr. Tom Bracken, you may begin your conference.
Suzanne, thank you very much, and welcome to everybody on the call. I know we have a number of companies and a number of our chamber colleagues in New Jersey on the call. We're here today to talk about the federal government's CARES Act, which is a $2 trillion package that could be of significant benefit to most of you. We're very pleased to have Neil Bradley with us, and I'll introduce Neil in a minute, who has really shown to be one of the experts in this act that has been recently passed, with all the myriad of details that he will pass on to us. The presentation will be from Neil with a Q&A to follow, and we have a 1-hour time frame on this call. I also at this time would like to thank the co-presenters that have been very gracious in sending out information to their members for this call. Those presenters are the New Jersey Business and Industry Association, Michelle Sakurka, the Meadowlands Regional Chamber of Commerce, Jim Kirkus, Commerce and Industry Association of New Jersey, Tony Russo, Chamber of Commerce Southern New Jersey, Christina Renna, Somerset County Business Partnership, Chris Edwards, African American Chamber of Commerce of New Jersey, John Harmon, Hunterdon County Chamber of Commerce, Chris Phelan, and Morris County Chamber of Commerce, Megan Huncher. So thank you to all of you for helping us with this call and providing a good audience for Neil. Neil Bradley, first of all, I'm very pleased that Neil could take the time to be here today. He's in great demand around the country, and we're very thankful that he could find some time to talk to us today. Neil Bradley is the Executive Vice President and Chief Policy Officer at the U.S. Chamber. He spent 2 decades working directly with congressional committee chairs and other high-ranking policymakers. And at the Chamber, he aligns the organization's overall policy priorities and advocacy efforts. He oversees many major divisions, including economic policy, employment policy, small business policy, cyber, intelligence and security policy, health policy, transportation infrastructure, and environmental affairs. I'm not sure you missed anything, Neil. His distinguished career, he had a very distinguished career prior to the Chamber, focusing on policy and economic issues, with several years working in the House of Representatives, where he worked for several congressmen. Also, while on Capitol Hill, Neil was regularly named to the roll calls list of the 50 top congressional staffers. He is also very highly regarded by members of the U.S. Chamber, including my organization. And without any further ado, I'm pleased to welcome Neil Bradley.
Well, thank you, Tom, and thanks for organizing this. And I appreciate everyone taking a little bit of time to learn a little bit more about the CARES Act and what it can mean to our communities and, importantly, to employers across the country. And so I believe everyone received a slide deck, and I'll walk through some elements of that, which I think will help kind of lay the context and may generate some of the questions that you might have. As Tom mentioned, this is a $2 trillion package. You'll sometimes hear people talk about another $4 trillion, particularly Larry Kudlow, the president's top economic advisor. That's because there's a portion of this bill, about $454 billion, that the Treasury Department can use to support credit facilities at the Federal Reserve. And through the Federal Reserve, they can leverage that money about 10 to 1, which will provide significant additional resources to support the economies, and in particular to support businesses as we navigate through this period. One of the key provisions that a lot of folks are focused on is obviously what it means for us as individuals. The bill includes automatic payments to individual taxpayers, $1,200 per individual, $2,500 for a couple filing jointly, plus an additional $500 per child. If you filed your 2019 tax returns, it will be based on those tax returns. If you haven't, that's okay. The IRS will use your 2018 tax return. And, of course, this phases out for incomes above $75,000 for an individual or $150,000 joint. By the way, the IRS is working to direct deposit this based on the accounts you designated and past tax filings, and they hope to have checks deposited within the next 3 weeks. The bill also includes expanded unemployment benefits. We saw the awful news this morning, another 6 million initial unemployment claims. Some things that this legislation does. One, the normal limitations on claiming unemployment. Either you've already exhausted your benefits, you haven't been in your employment long enough, you're an independent contractor or a gig worker. All of those are waived with respect to unemployment caused by the coronavirus. In addition, if you get unemployment, the federal government will add another $600 on top of your regular weekly state benefit, and that'll run through July 31st. A lot of folks have said, well, what happens, with folks coming back to work? The typical rules about being willing to take a job still apply here. And so if your employer calls you and says, hey, we're back open, come back to work, that ends your automatic eligibility for unemployment insurance. And, of course, this remains a state program administered through your state UI offices. Really want to devote the bulk of the time to what impacts employers. We've divvied this up into 3 buckets: the major provisions that impact all employers, those that impact larger employers, and then the provisions for small businesses, the self-employed, independent contractors, and nonprofits. So let's start with all employers. One of the most overlooked provisions so far is a provision that allows you to defer as an employer the submission of payroll taxes that you owe for your employees between now and the end of this year. So as you know, you write a check to your employee, you got to turn around and write a check to Uncle Sam for payroll taxes. The employer portion, that 6.2%, you can hold on to that and rack that up, and then 50% will be due at the end of 2021, the remainder due at the end of 2022. This is all designed to help employers with liquidity. This doesn't apply, importantly, if you have a loan forgiven under that Paycheck Protection Program, which is the program for small businesses that we'll talk about in a moment. Also, a lot of tax changes. If you have losses, net operating losses, you have the ability to carry those back now over 5 years, and you have more that you can count on each year. So that's an important tool for companies who currently have losses. If you have AMT credits, you can accelerate those, increased interest deductibility. Importantly, for folks who are in the restaurant or the retail space, if in the last 2 years or so you've made improvements to your property, you've probably discovered that because of an error in the 2017 tax law, you haven't been able to fully take advantage of your ability to expense that. That quirk was fixed, and you can do that. All of these provisions benefit the liquidity of employers. Next, an employee retention credit. This was a last-minute addition to the bill. It wasn't in the initial versions. It was included right before it passed the Senate and went to the House. It's for employers, including nonprofits, of all sizes who are fully or partially shut down due to a governmental order, or who have a 50% drop in gross receipts in a quarter compared to the quarter a year prior. What do you get? It's a refundable credit equal to 50% of the first $10,000 in wages, which is a fancy way of saying a $5,000 tax credit. There are different rules about which employees it applies to. If you have more than 100 employees, it applies to employees who you are paying but are not providing their normal services. Services isn't defined. This is one of the things that we're working with the Treasury Department and the IRS. What does that mean? Does that mean they can't be working at all, or does it mean that they're working from home, or that they're working in some other fashion? That isn't an important distinction if you have 100 or fewer employees. For 100 or fewer, it applies to anyone you pay during the eligible period, i.e. while you're shut down or that quarter where you've lost revenue. Again, interactions, if you're a small business and you've taken that Paycheck Protection Program loan, you're not eligible for this. Mid-sized and larger companies, this is probably the least defined at the moment because with the exception of airlines and the air industry and some national security companies, there are no real parameters around this program yet. It's $500 billion in total, about 46 of that's for those industries I just mentioned. The rest of it is for the Treasury Department to support loans, loan guarantees, or to seed those credit facilities at the Federal Reserve. This doesn't mean that we're going to be running to the Federal Reserve to get financial aid. The way the Federal Reserve operates is that they set up facilities that support lending in the private community. So this will provide more support for financial institutions to provide loans to businesses during this period. It does come with some restrictions related to stock buybacks, dividends, and executive compensation. We expect to see a lot more details over this over the next 4 or 5 days or so as this program finally gets established. So let's turn to the meat here, what we know about small businesses, the self-employed, independent contractors, and nonprofits. Perhaps the most generous provision is something called the Paycheck Protection Program. It's $349 billion in loans for small businesses. That's generally anyone with fewer than 500 employees. But if you otherwise meet the SBA definition of small business, you qualify. 501c3s with fewer than 500, and for the first time, self-employed and independent contractors. So if you're someone who makes a living getting 1099s, you qualify for this. You're eligible to borrow up to 2.5 months of your average payroll, but not more than $10 million. This is not a program that you go to the SBA to receive. This is one that's going to be done through local and national lenders. Earlier this week, the Treasury Department announced that an initial application and guidelines, which are continuing to be refined, but that they intend to designate all FDI-insured banks and insured credit unions as being eligible participants. And so if you bank at one of those institutions and they elect to participate in this program, you'll be able to go to them. Very minimal underwriting requirements, no collateral, no personal guarantee. And importantly, we don't want small businesses to have a big debt overhang after this. So you have the opportunity to convert that grant into a loan. Convert that loan into a grant. How much can you calculate on that? It's based on what you as an employer spend the 8 weeks after the loan is originated. So in the 8 weeks after the loan is originated, you tally up what you spend on payroll, which includes, by the way, the health care expenses for your employees. And by the way, it anticipates you paying them even if they're not brought back to work, plus what you pay on interest on mortgages related to your business, utilities, and rent. Add all of that up, and that's your maximum loan forgiveness amount. However, if you've reduced your employee headcount relative to earlier in the year or the same period last year, you proportionally lose some of that loan forgiveness. Same is true if you cut employees' wages by more than 25%. We know lots of businesses have already had to lay people off or reduce wages, so there's the opportunity to add those employees back, and if you add them back and maintain them, you're held harmless for that reduction in employee headcount or wages. This is a new program. We've never seen anything like this before. At the U.S. Chamber, we have a guide, uschamber.com/SB loans. We're updating this every time new guidance comes out. So, for example, the guide that's currently available includes the latest details about the interest rate, 0.5%, but a word of warning, I expect that to change tonight to go up to 1%. Also, term of the loan, 2 years, and some other interesting details. Next, for all small businesses, is something called the SBA Economic Injury Disaster Loans. If you've experienced flooding or hurricanes before and you've had an SBA disaster loan, that's what this is. And so eligibility is again expanded to include independent contractors, but this operates more like a loan, up to $2 million in working capital, long-term, 30 years, a little higher interest rates. Payments are automatically deferred for a year. They've also, in the CARES Act, reduced the underwriting based on credit scores, no personal guarantee for up to $200,000, no collateral for up to $25,000. Something that is brand new as of last Friday is the ability to get an emergency $10,000 grant. So you apply for the EIDL loan, and you apply for that online at SBA.gov. You can request an emergency $10,000 grant that does not have to be repaid. However, if you get that Paycheck Protection Program, they're going to dock that against what your forgiveness is there. let me cover two other quick aspects that we get a lot of questions about, particularly for small businesses, and that is provisions that were from an earlier bill, what's called the Phase 2 bill. The Phase 2 bill included a requirement that employers with fewer than 500 employees offer 10 days of paid sick leave related to COVID-19. So an employee is ill, they've been quarantined, they have to take care of someone who has, or they have a dependent child whose school or daycare has been closed. Leave is at the regular rate of pay if it's because of their own illness or quarantine at a maximum of $511 a day. Two-thirds of their regular rate of pay, up to $200 if they're taking care of a family member. We're used to mandates out of Washington. For once we got a mandate out of Washington that's fully funded, employers will get paid back dollar for dollar what they spend on leave up into the maximum daily amount. There's been a lot of confusion about whether smaller employers, those with fewer than 50 employees, can be exempt from the requirement. They can, but only to the extent that the leave is related to your employee taking care of a child and that them taking the leave threatens the viability of the business. Also, if the employee can telework, they're not eligible for the leave. The last part of that is expanded 10 weeks of paid family leave if your child's school or daycare is closed, if you can't telework and you have to take care of them. Again, at the two-thirds rate of pay, up to $200, again, fully reimbursed by the federal government. Again, the same rules apply for employers with fewer than 50 in terms of the exemption. Now, I know that's a lot to run through really quick. I'm glad you all have the slide deck. Let me just tell you about some more information. At uschamber.com, we have an updated guide for the Paycheck Protection Program. We have a guide for employers on the SBA EIDL loans, that's economic injury disaster loans. We have a guide for employers on how to use the Employee Retention Tax Credit. If it's not up there already, it'll be up in a couple hours, a guide on the paid family and sick leave. And so it's a good resource, as I know. The New Jersey Chamber also has great resources online to help folks kind of work through this, and we're all constantly updating this as new information becomes available. So with that, I'll stop and I'll turn it back over to Tom, and we'd be happy to take your questions, your comments, or your advice.
Hey, Suzanne, before you go to questions, Neil and I talked a little bit before the conference began, and I am hearing that the banks and the process of applying for the 3P loan is not yet refined. A lot of banks aren't ready to accept applications tomorrow, and the process is probably going to be a little bumpy. Can you add a little color to that, Neil?
No, that's exactly right. And, part of this is some of the initial guidance that came out didn't quite match what the law said, and some differences of opinion about that. There's also some concern about how banks, particularly if they don't have a normal business banking lending relationship with you, how they verify some of those payroll numbers. There's also confusion around, some employers use payroll services to pay their employees. And so some of the information that they initially said borrowers would have to provide, employers actually don't have because it's done through the payroll servicing. So we are working in real time to try to get that fixed. I'm really worried that that's not going to be ready by tomorrow. Banks want to do this. They're doing everything they can to make this work, but they got to have the cooperation out of the federal government for clear guidelines, clear standards, and to the extent that they want them checking back with Washington on all this information, they got to make that seamless too. So tomorrow could be a bit bumpy, but everyone's working overtime to try to get it worked out.
Thank you. Suzanne, you want to open it up to questions, please?
Of course. Just a reminder, in order to ask a question, simply press star, then the number 1 on your telephone keypad. We'll pause for just a moment while we compile the Q&A roster. Our first question comes from the line of a participant whose information we were unable to be gathered. We queued up for question. Your line is open.
Do you have a question? Go ahead.
I guess this is me. I have two questions, actually. For the PPP plan, if owners are getting monthly guaranteed payments, can they be included in the payroll?
So it's wages, commissions, tips, and other things. So I think the thing you'd want to pay attention to is whether that guaranteed payment is considered wages or whether you're taking that's being taken out as a profit. I think that's some of the differentiations you'd want to consider is how that's reported, and that will help determine whether it counts as payroll.
Okay. The other one is it says $100,000 in compensation. Does that include what the person is paid plus insurance or including insurance?
So the $100,000. Yeah. Yes.
Okay.
The $100,000.
Okay.
Go ahead, please.
Okay. So if somebody makes $100,000 and their insurance contribution from the firm is $30,000, can both of those be included?
So you can include the $100,000 limitation is on wages, and so if they're making $99,999, you can capture all of that. Plus, you get to add the pro rata expenses for certain benefits. That doesn't push them over. If they're making $105,000, it's that $100,000. You get the $100,000 in wages, you lose the $5,000.
Okay, so it's the $100,000 in wages and the benefits is its own category. So I can include both items. Okay. Thank you.
Mm-hmm.
Your next question comes from a participant whose information we were unable to gather. Please go ahead. Your line is open if you've queued up for a question.
Go ahead if you have a question. Do you have a question? I think someone's line's open.
Please go ahead. Your line is open.
You might be muted.
We'll move on to the next question and see if we can find someone else. One moment. Again, if you've queued up our question, please go ahead and speak. Your line is open.
Hello, are you able to hear me?
Yes, sir.
Hello?
Yes, we can hear you.
Oh, thank you. I have three separate questions. The first, loans that ultimately get converted into grants, do you know if those funds will be taxable in subsequent tax years?
I believe they are not subject to tax. So normally loan forgiveness is taxable. In this instance, it is not.
Okay. Number two, what happens if and when the demand under these programs exceeds the supply? In other words, what happens when they run out of funding?
So the three, with respect to the PPP, this is and the $10,000 grants, both of those have a capped allotment, and so once that is reached, they will be unable to continue originating loans or grants under those programs, and Congress is going to have to revisit that. They are very aware of this. In the last 2 days, I've been on calls with both Democrat and Republican senators and House members. To a person, they've all said, if that occurs, we anticipate revisiting it. Just to give you some context, by the way, 350. How should we think about that in terms of how far that would go? $350 billion is equal to 6 weeks of payroll for every business with fewer than 500 employees in America. Now, so you get to borrow more than that. You get to borrow a whole extra month more than that. But to give you some sense, I've heard rumors that this is going to be, by the weekend, it's going to be all out. I think that is unlikely. It's quite possible we do at some point reach the max, and at which point Congress would have to provide additional funding.
Okay, final question. Can you offer any guidance as to what is included under the term utilities? Would that include phone and internet and trash removal in addition to electric and natural gas or fuel oil?
You'll want to double check this, but based on my recollection, it includes telephone and internet. I do not believe it includes trash removal.
Okay,
but that's
an
important thing to double check. If you get one of these loans, by the way, and remember it's that 8-week period after you get the loan, you're going to want to pay careful attention to where you're spending your money as a small business, so you can document everything that can qualify for loan forgiveness.
Wonderful. Thank you very, very much.
And our next question comes from a caller whose information we were unable to be gathering. You've queued up for a question. Please go ahead. Your line is open.
Hello? Can anybody hear me?
Yes, we can hear you.
Wonderful. So I'm wondering about the full-time equivalent employees. I understand that you have to have the same full-time equivalent employees to get the full benefit forgiven, but how is that recorded if I have some employees working more hours, some employees that were part-time previously working more hours? Is that going to have is that going to work out the same way as 2 employees working part-time hours?
So this is an area where we hope there'll be future guidance to provide clarity that they have not issued yet. I'll tell you, if you read the law, the way the law is initially written, it's a full-time. An FTE is a person who's working whether it's full-time or part-time. We're hopeful that as we kind of get into this, and admittedly, this thing was signed into law on Friday, so we hope that there's going to be more guidance. But as of right now, based on what we know in the law, there's not a lot of wiggle room, and that's something that's going to have to come later through guidance and regulation.
Great, thank you.
Our next question comes from a participant whose information we were able to gather. Please go ahead if you've queued up for a question.
Hello?
Yes, sir.
I'm a private practice physician in New Jersey, and we do only elective procedures in my office. I have 3 full-time employees plus myself. I'm an LLC as a disregarded entity as the sole proprietor. And Governor Murphy, ordered no more elective procedures in the office, so we've been essentially closed for about 2 weeks right now. And I'm wondering, from your experience, which of these programs, would make the most sense for a small business like myself to apply for?
So I'm always hesitant to give individual advice because it does depend on the totality of your circumstances. So I'll just say broadly, if you think about these programs, the Paycheck Protection is the most favorable program broadly to the extent that you can continue to pay your employees in that 8 weeks after you receive that loan and maintain that because of the ability to have that loan forgiven and because the current interest rate is so low on this loan, even though the term is 2 years. If those are potential hindrances, the typical injury disaster loan is an option for folks, but it has a higher interest rate but a much longer term, but no really opportunity for forgiveness. If for folks who don't want to mess with loans, period, it really is that employee retention credit. If you say, I'm going to make the decision to keep paying my employees and I'm just going to recoup, if I pay them $10,000, I'm going to recoup $5,000 as a tax credit. That's the way I generally tend to think of the stacking based off different factors.
So if we're closed probably for the next month or so, and in that my employees are currently on furlough, although I'm continuing to pay health insurance benefits. If let's say in 30 days or 60 days, the governor rescinds his order, his executive order, so we could reopen doing elective procedures in our office, then it would make sense for me to reopen my doors. At that point, if can I apply now for the program, and am I still eligible then if in 60 days my employees come back to work?
So with respect to the most favorable program, that Paycheck Protection, there's a window to apply, I believe, through June. Understand it is capped, and so there's always the risk that at some point the program comes to an end. But the key part to think about with respect to can I have this loan forgiven is what happens for the 8 weeks after that loan is originated. So if you have a loan originated next Monday, it really is about that, what you do during those next 8 weeks, and for purposes of maintaining the full forgiveness, maintaining those employees through June 30th. And so admittedly, when this provision was drafted, you're talking about a week and a half ago, where the time, everyone thought the timeline might end up being shorter. And so those are things I think that people are factoring into when they think about these different programs and the wherewithal and how long they think it might go on. And so I can't give you a right answer or a wrong answer there.
Sure, no.
Those are the things to think about.
Yeah. So if I apply tomorrow for this PPP program, and I bring my employees back, online, let's say, when this is funded in a few weeks, and at the end of, the 3 months, and we're really operating fully, and I've been paying my expenses, just to repeat, what percentage of the payroll expenses of their wages is going to be forgiven, and what percent of my other operating expenses, rent, utilities, are going to be forgiven?
Great question. So the way the law reads that for the period of beginning the 8 weeks after origination, 100% of the payroll costs and the utilities, rent, mortgage. By the way, all those have to be things you've entered into before February 15th. You can't game the system, and take new mortgage, et cetera. But Treasury 2 days ago advised that you could only maybe deduct 25% of those non-payroll expenses. We've been going back and forth with them over the last 2 days because that is not what the statute says. And so, but that's what they've put out there in their guidance to borrowers. And so we're hopeful that in the new guidance we get tonight or tomorrow morning that's fixed. But for full disclosure, there's a discrepancy between what the law says and what they put out in their documents 2 days ago.
Okay. And is there any time limit before I would be applying for the PPP program that my employees have to have been out of work? So they've been out of work now since, let's say, one of them since last Monday and two other ones since last Wednesday.
No requirement in that regard.
Okay. Well, this has been very informative. If I can ask one more question, my wife is a mortgage broker, and she is not an employee of her company. She's an independent contractor. She's experienced very substantial loss of income, obviously, since people aren't going out to buy houses right now. What kind of programs are out there for her?
The PPP, she would, as an independent contractor, she can qualify for a loan and loan forgiveness under the PPP program.
Okay. Thank you very much.
And our next question comes from the line of Peter Fedorius. Your line is open. Please go ahead.
Thank you. Gentlemen, I'm listening to Neil. I'm wondering if I made a mistake here. We were shut down by the state on March 21st, and I made a decision to keep all my employees on payroll. If the loan, of course, hasn't been originated yet, does that mean I can't be reimbursed for the employees I've kept on payroll for these 2 weeks?
So with respect to the payroll protection program,
yep.
The time that they're counting is 8 weeks post-origination. If you decided to go the employee retention tax credit route, I believe you can go back. It's a date in the middle of March. I apologize, I don't remember it off the top of my head, but there's a little bit more flexibility. But remember, if you go the employee retention tax credit route, you can't go the PPP route.
Yeah, and I'd rather go the PPP route. So you don't think I can be refunded for the 2 weeks that I've kept them on?
I mean, the way
under the PPP, yeah.
Yeah, absent, like, again, ultimately it's the Treasury and the SBA who will offer guidance and rules that we follow. But the way the statute is laid out, the period is the 8 weeks after origination.
It's disappointing because they try to tell you to keep your employees. So I guess I misunderstood that. I should have let them all go. Correct?
I won't pretend to offer advice there, but I think that they thought that this would be enacted and implemented a little bit faster than it's being, and so people are in fact getting caught in a window.
Got it. And then the second part of that question, then, so I really should hold off, and if I heard you correct, on paying any interest on the loans or utility payments until I get that loan, if I go to PPP.
I wouldn't advise you on that, but I can tell you that the way the statute reads, it is payments that you've made after the origination for those agreements that were in effect pre-February 15th.
I got it. Thank you so much.
Mm-hmm.
And your next question comes from the line of Dennis Wilson. The line is open. Please go ahead.
Hi, thank you. I just want to confirm that C4s, 501c4s, are not eligible for PPP. Do I have that correct?
You have that correct. That is correct.
Thank you.
And our next question comes from the line of Dylan Harmon. Your line is open. Please go ahead.
Yeah. Hey, Neil, how are you?
Good, John. Great to hear your voice.
Yes, sir. One question. Can you combine the Paycheck Protection Program and the Economic Disaster Loan? Can you get two loans?
You can get two loans. That $10,000 grant under the Emergency Disaster Loan, if you take that, they will deduct that off of your loan forgiveness under the Paycheck Protection. And remember, you cannot borrow money. You can't borrow money twice for the same expense. And so even though money is fungible, et cetera, if you're applying in one program saying this is what I'm using the money for, you can't turn to the other program and apply for the same. Now, this is another area where the initial guidance out of Treasury, the initial application, went a little bit further than the statute does. And so this is an area we hope to get real clarity on in the next day or so.
So now I got a follow-up then. So I've already gone online, got the $10,000, I guess, in play, and they give you a number at the end. Is there another step to making the application with the bank? Does something come back to you from SBA?
The EIDL loan is completely done through the SBA. But if you are if you've already done that step, and you let's say on Monday you decide to go to your lender because you want to do a PPP, there's a provision in the application, and it's in the statute, to say that, I think it's between like February 15th or maybe a little bit earlier that, and now you've gotten one of those EIDL loans, you can check that and you can roll that over into your PPP loan.
Got it. Okay. Thank you.
Mm-hmm.
The next question comes from the line of Sandy, Missouri. Your line is open.
Hi. I was wondering if you can tell me how long somebody has to have had people on payroll, if they've had them from the beginning of the year or starting when.
So there are different windows, and this is explained in the guide on the U.S. Chamber's website. In general, you're looking at your head count for either, to do your comparisons for loan forgiveness, you're either looking at a period that corresponds to the same applicable period in 2019, or you're looking to the first month and a half to 2 months of 2020. And so you can take a kind of an election there with respect to what you're measuring yourself against in terms of employee headcount.
Okay, so if I understand correctly, in other words, if I'm looking at it would be March 2019 to comparing it to March 2020, or I can look at the time period of the 8 weeks afterwards.
Yeah, so if we're talking about your forgiveness and you want to compare the number of employees, so you take you take the period between when you kind of get the loan in June 30th of this year, and you're going to compare that either to February 15th to June 30th of last year for your average head count, or you're going to compare it to January 1st to February 29th of this year.
So it's not only the head count, it's how much we were paying them, or is the amount we're paying them is really just for the period of the 8 weeks that we're looking at?
It's two components. The first, and the way to think about it is this, is first you want to figure out what is the maximum amount of loan I can possibly have forgiven. And that's done by adding up those expenses in the 8 weeks after origination. Then what they say is, we now know that amount. That's the maximum amount you can have forgiven. Then we're going to reduce that if you have either reduced headcount relative to the reference period, that's the first 2 months of this year or the same period last year, or if you've cut employee wages by more than 25%. And so if you've done either of those things during that period, and by the way, if you've already done them and you restore it, no harm, no foul is the way that the statute reads, then that's what governs the forgiveness. There's two factors to it. How much did you spend, and then what did you do with headcount and pay and employee pay? And if you reduced either by the applicable amounts, then you're going to lose part of that maximum loan forgiveness.
Okay, thank you very much.
There's a great cheat sheet that actually walks you through on our website that helps you, that shows you exactly what you'll be multiplying and dividing by to get these numbers.
Great.
And your next question comes from the line of Tony Dennison. Your line is open. Please go ahead, Mr. Dennison. Your line is open.
Hello, is that me?
Yes, sir.
Okay. My question is for chamber members and others who are looking to apply for the PPP. In our area, there are a limited number of approved SBA lenders, and I know it's going to be expanded to FDIC and other secured lenders. But I'm starting to hear that the banks may take their own customers first. Is that going to be allowed under this program?
As of now, there's nothing that would restrict that. I'll tell you what we're hearing is based on the kind of the requirements that's currently in the guidance, and this is what Tom mentioned, that they're still going back and forth on creating so much consternation. Mm-hmm. It's much easier for a bank to process and to certify. And one of the questions is how is a bank supposed to certify these payroll numbers, and how are they supposed to certify that you were verify that you were in existence before February 15th? If they've already been doing business with you, they have all of that, and it's much easier for them to do it. If they don't have a relationship with you, that's harder. What what the banks are asking the Treasury and the SBA to do is to make it easier for them to service everybody without doing that, and that's part of the discrepancies that Tom mentioned kind of at the beginning of our Q&A session.
Okay, thank you.
Our next question comes from the line of Pat Scanlon. Your line is open. Please go ahead.
Yes, I have a question regarding the PPP plan. A small business versus being self-employed. As the owner of an LLC and a disenfranchised entity, I do have a full-time employee, et cetera, and myself. However, I'm looking at the second criteria being the self-employed element as you take an owner's draw within the LLC. I'm wondering, is there a clear-cut definition and separation between the two, or do you wind up pushing everything into the small business application category?
That's a great question. I don't know the answer to that. To the extent that you, as I understood the situation you described, in one sense it's both an employer element, in the other sense it's really a self-employed element. And do you have to end up going one or the other route? This is the type of thing that we're going to have to look to kind of detailed guidance that we just don't have yet on how you navigate that. There are a number of those type of issues that we've raised that I know that they're trying to work through, and this is also a good one for us to raise with them.
Well, that's great. I will hopefully there's an answer, because it's a question that's confused a lot of the people I've spoken to about it. But I guess the question comes down to: is an owner's draw, does that qualify you as being self-employed versus just strictly an employer in an LLC? Well, thank you for your. I hope we can find some more information on that. But thanks for your response.
Thank you.
Our next question comes from the line of Darlene Monday. Please go ahead. Your line is open.
Hi, yes. Can you hear me?
Yes, ma'am.
Hi, yes. I'm actually an independent contractor and a travel agent. Is this actually a loan that gets paid back? It's just a little confusing on what I would do with my situation.
Yeah, so as an independent contractor, you can file for the loan based off of your 1099 income. So if you're working for multiple folks, the multiple 1099s, up to a total of $100,000 on an annual basis. Obviously, that's then prorated to 2.5 months, and then you presumably, if you're documenting that you're paying yourself, kind of that's the process. I will say that this is an area where the law, it isn't really clear. Like, how do you attest that you paid yourself with that money? And so one of the things that they've announced is that while small business employers can begin filing tomorrow, independent contractors cannot file until April 10th because they're asking for they want the extra time to provide more clarity around some of those issues. But talking to the drafters of the legislation in the Senate, that was their intent.
Okay, so if I borrow this money, it goes as a grant, so you don't pay it back. There's no interest or anything like that.
So you will after the end of June, you apply you go back to the lender who originated the loan, and you have to bring in kind of documentation, and they process the loan forgiveness.
Okay, and is it a guarantee that you get the loan forgiven? Like, say I borrow $5,000. Are they going to forgive $5,000, or is there a chance that they could be like, well, no, you have to pay back more or less, or there's an interest or something?
So the things, particularly as an independent contractor, you're going to really want to see the guidance that they put out over the next week, before you apply on, what kind of documentation are they looking for that forgiveness. They have not announced that yet. The statute, the law doesn't have a great deal of clarity on it. You can read what their intention is, but we got to make sure that intention is replicated in the actual process that people go through. And so you're just going to want to pay attention over the next, until April 10th, for the guidance that comes out about what they say in terms of the documentation for loan forgiveness, particularly for an independent contractor.
Okay, and where do I go for that? Where do I find that information? Is that on the uschamber.gov?
USChamber.com, but you can also, the guidance is coming out of the Treasury Department, so treasury.gov, and there's a little red banner at the top that says Paycheck Protection Program. You click on that, and you can find some of this detailed information. But again, they've announced that they're not doing independent contractors yet.
Till April 10th.
Till April 10th.
Okay, great. Thank you.
Mm-hmm.
Our next question comes to the line of Amy Murphy. Your line is open.
Hi, I own a hair salon, and I have about 25 employees. Right now, they're all on unemployment because we were forced to close. Now, with unemployment, they're getting a portion of their normal pay plus the $600 a week extra, which, none of them have gotten yet, but they're supposed to be getting. What would the benefit be, or why would they want me to put them back on the payroll at their normal wage when they could be getting more from unemployment? I just want to make sure I'm doing right by my employees.
That's an issue that's come up a lot, and you're asking exactly the right questions with respect to your employees and in that particular fact pattern. So you're not missing anything at all. That's exactly.
Because I'm like, why would I do this? I would do it to benefit me, that I would have some of my rent forgiven, but why would people choose to do this over keeping their employees on unemployment?
Well, in some respects, some employers have some employees, and so they've had to let some go and have kept some in, and this will enable them to kind of bring everyone back. For some, they're anticipating reopening. For some, they're continuing to be able to try to pay them, even though they're shut down. And so this is a lifeline there, right? So this is one of those things that you create 5 different programs, and sometimes the incentives don't all work in the same direction.
Okay, yeah, because my bank, he called me up today, and he was, really encouraging me to take this, and he's like, just do it and worry about it later, and I'm like, this scares me, Now, could I use some of this money for, maybe I would be reopened within the 8 weeks. Does it matter if I'm open or closed if I'm using this money for the payroll?
It does not, and in fact, one of the things we get a question a lot of, so under this program, I originate the loan on Monday. My 8 weeks stop, but I'm not reopened. Am I expected to be paying my employees? And the answer to that is yes. When Congress designed this the original intention of this program was designed to help small businesses keep their employees rather than furloughing them or laying them off. And so they fully intended that you could have some period of time where the employees weren't at work, but they were still getting paid, and that the justification is Uncle Sam was paying them through this loan/grant, as opposed to Uncle Sam paying them through unemployment insurance.
Right. So if I kind of take a chance and do it, and then, 6 weeks from the time I get the money, it's like, okay, we're not opening in sight. Do I just kind of pay all of my employees a lump sum to be able to say that I paid it within the 8 weeks?
Well, so remember, this is where the 2 factors come in, right? So you have to consider both the factor of what you've paid your employees in that week, and then if you immediately, depending on when your window starts, let everyone go, you could end up jeopardizing that loan forgiveness. So the calendar.
Oh, because I would be letting them go after that.
Before,
8 weeks
between then and June 30th. Correct.
Right. Okay. Oh, I wish somebody could wave their magic wand and tell us when this is all going to go back to normal.
You and me both. Amen.
Okay. Or, I mean, worst case, then if I don't use it for payroll, then I just have to pay the money back and it doesn't get forgiven. But at least I'll have a low interest loan to pay my rent and utilities.
That's correct. Yeah. So it's
okay.
Yeah. Understand the current terms that they've released is it's a 2-year note.
Okay. Okay. Thank you so much.
Mm-hmm. You're welcome.
And our next question comes to the line of Marjorie Perry. Your line is open.
Hi. My quick question to you is that once the banks accept this application, what's the turnaround time?
It's unclear at the moment. To go back to Tom's excellent point that he started on the Q&A, it really depends on how complicated the federal government has made the back end processes for the banks. And so the simpler they make it, the faster it'll be. The more complicated it is, the slower it's going to be. We're encouraging them to make it fast. I know the banks are encouraging them to make it fast, but it's really not within the bank's control. It's really much more in the control of what the Treasury Department and the SBA decide in terms of the process.
Thank you.
Hey, Suzanne, this is Tom Bracken. We're approaching our hour, and I want to be cognizant of Neil's time. And I assume, Neil, that you'd like to stop this at 60 minutes. Is that correct?
Sadly, I have to go on to do another one. So
all right. So let's stop the Q&A there. I have one final comment, please, because many of the callers on this call are chambers of commerce, and many of them, including our chamber, is a 501c6, which is not eligible under the CARES Act, the New Jersey EDA pronouncements, or the SBA. Are there movements in Washington to include 501c6s?
We're doing everything we can, thanks to you and the Federation of Chambers, to help push that to make sure that happens. And it's not just chambers. Even local labor organizations that might be 501c5s, they're excluded. Fraternal organizations, social welfare organizations. Someone asked about C4s earlier. We're all kind of excluded by this, and we're hopeful that in the next piece of legislation we can get this fixed.
Great. Well, Neil, when I introduced you, I gave you a rosy introduction. You vastly exceeded any high expectations I created for you. I can't thank you enough. The value you have added to the written outline of the CARES Act has been absolutely wonderful, and I'm sure you'll be passing on more information through the U.S. Chamber as it comes out. Truly want to thank you for your time, Neil, and thank all the participants on the call today.
Thank you, Tom. Everyone be safe and be healthy.
And this concludes today's conference call. You may now disconnect. 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 Disconnect.